What's up, guys? This is Bandit FX, and today I'm going to be going over my pre-market analysis for GBPAUD for March 21st, 2021. So let's take a look at the monthly time frame for a second here. Um, so looking at the monthly, let's zoom out a little bit, get the overall bias. Okay, so we are trending down. We have created a lower high. Let me get rid of these EMAs real quick. Okay, so we have created a lower high, and it looks like we're coming down. So on the monthly time frame, Um, obviously, there's 10 days left in the candle, but it looks like we're forming a resistance right here. It looks like we're rejecting this previous support area. Our next level would basically be 1.74175 to continue down if we are going to. So let me mark this out as our monthly support. What is going on? Okay. Okay, so we have our monthly support. Now let's take a look at the monthly resistance and mark that out as well. Okay. So we have our monthly levels drawn. Let's drop down to the weekly. Take a look at the weekly. The weekly lines up with the monthly, so we're going to leave that alone. Our most recent weekly support is actually right here at 177,951. Okay. Yeah, because this lines up pretty good. So this is where we could see a rejection coming in. Okay, so we have our weekly support. Now let's break it down to the daily time frame. Daily is ranging heavily. So very sloppy price action on the daily. There really is no clear support or resistance because even though we could say that the resistance right here is right here and the support was right here that we're breaking, there are all these wicks to the downside and wicks to the upside indicating a range on lower time frames. So I'm not even going to mess with the daily. Let's take a look at the 4-hour time frame. Okay, much cleaner. So looking at the 4-hour time frame, we're basically looking at a resistance level here at 179,600, and we have our most recent support basically at that daily wick fill of 178,200. So let me mark these out. And okay, so we're basically in a range on the 4-hour, and we did actually break a support. This is a previous support level. I'm going to mark it because it's very important that we stay below this to continue down. So what ended up happening on the 4-hour time frame when we started coming down is we closed below this previous support, and this last 4-hour candle before close on Friday actually tried to reject this area but failed and then continued back down. So this is showing a clean break, a retest, and basically a failure to form support and continue up. So what we're looking at is a continuation down here on the 4-hour as long as we break this 4 hours candle low. So let's go down to the 1-hour time frame. Very messy range on the 1-hour time frame. So I'm not even going to look for a sell until we break below this wick. This is very important. When prices ranged in the past, even back here, look at this sloppy price action. It's just been doing nothing but ranging. So it's very important that you do not try to trade in a range. I promise you, you will lose your money. Don't even try it. It's not worth it. Don't try to beat the market. Just take the easy setups. That's the best advice I can give you. So basically, I'm looking for a break of this wick in order to continue down. It lines up with this as well. So let me just mark this out right here. We're looking for a break of this wick to continue down. And let's see how big this range is. So we get the first wick fill at about 12 pips, nothing too big. But then our next is at 35. So I do think that once we break this, we're going to have, as long as we have volume, we could definitely continue down to this lower level right here. So let me just mark this out for our last, basically, hourly support. This will be our first target if we do get a confirmation for sells here. So mark this as TP1. And then sells below 178,650. Okay, so this makes sense as long as we break this wick. So Just mark this. Now, because this was ranging before, what I would ideally like to see is a candle close below this range. Candle close below this range and somewhere around this area, and then the next candle to actually break the low of this wick. That would be an ideal scenario for sell. So now you know where you're going to have your stop loss, where you're going to have your take profit. Everything is going to be easily readable. Now, if you have a candle that just shoot straight down and you don't get an entry, it's very risky to take an impulse entry at this point because price was ranging here in the past, and the size, judging by the size of these wicks, this could definitely happen again. You could have a candle that looks like a clean break come all the way down here. That's probably going to be like 8 pips in profits, and then all of a sudden wick right back up and close up here. So if you don't get a confirmation, that's not a problem. It's okay to miss a trade. It's not okay to take a stupid trade and lose money for no reason. So when price is ranging, do not take impulse entries. Don't do it. Um, Basically, what we're gonna look for, like I said, here, let me just draw it out because it's easier to show you guys actually than to do this. So, okay, let's see. Let's make this red, 100%. All right. So what we're going to want to see here is a bearish candle come down to this level, right? And then close below this range. So just about right here. So as long as we close below this range, right? If we get a top wick that forms and then a continuation, bear with me, I'm with the best at drawing on TradingView. Um, so if we get a top wick that forms like this, right? Basically retesting this level before continuing down, that will be an ideal confirmation for sells. Let me draw this bottom wick real quick. Okay, on the previous candle. So basically going to have a test of this level. Okay, that is not where I wanted it. Whatever, you get the point. Um, so we have our bottom wick, our squiggly bottom wick. And then if we get a top wick on the next candle, basically to retest this area or retest the bottom of the range, it's going to be an ideal option to sell once we break below this wick right here. So this is what we're going to want to see. Why is TradingView fighting me? Okay, so basically what we're going to look for is a break of this wick, if we do get one. So you want a big body bearish candle wick to be formed, and then a continuation and breaking the low. That would indicate a confirmation for sells to continue down to the bottom of this range at 178, 288, or 290. Stop loss obviously above the current candle, which would basically mean that if your trade were to be invalidated and your stop loss would be triggered, that means that price is coming back up into the range, which means sells are no longer valid anyways. So that's what I'm looking for as far as sells. Let's see if there's any confirmation for buys or any possible buys in the near future. Um, so judging where price is at, we do have this very, very clean traffic to the upside. Previously, it hasn't ranged too bad in here before, so I'm not too worried about it. So let's see. Let me switch this back to my zones. Okay, so we have our resistance level right here for GA on the 1 hour time frame, 179136. So this is basically going to be buys above, let's call it 150 or 140. Okay. Basically, once we break and close below this or above this level, we should have a continuation straight up because we do have clean traffic. Looking at the 30-minute, this might be our only area of concern. So this is a resistance, was a previous support. This is where we could see price rejecting. So this range is uh, just about 30 pips. So this is a very good, pretty big range here to trade as long as we get a 30-minute candle close above this area. I do believe we can continue up. So let me mark TP1 for you guys. Okay, so this is where I'll be taking profits GA does continue up above 179,134. So yeah, guys, that's my breakdown on GA. GA is very, very, very volatile. It wicks out a lot. So um, always make sure that you're securing profits early, especially on a pair like this. You know, if you get a big impulse move up, if it stalls at 9 pips and your take profit, you know, to secure is at 10 pips, just please at least move your stops to break even. The last thing you want to do is get caught on a wick on GA. It is not fun, especially something like this. You know, you think you get a clean break, you know, you're probably close to your take profit level, and then all of a sudden it wicks right back up and stops you out. That's not fun. So, it's always better to preserve your capital rather than insist upon your bias being right. Because, to be honest with you, the market really doesn't care about your analysis. The market doesn't care what you think, what your bias is. The market's going to do what it wants, and it will take your money if you don't agree with the market. So you have to be fluid with your analysis, right? So um, most people will just take a trade and be like, it's either hitting my stop loss or my take profit. Well, yeah, based on the current. You took a trade based on the current price action, right? The current information you had, the current candlesticks. Imagine each one of these candlesticks is a piece of information, right? As time goes on and you get more information, that may change the overall bias that you have. I mean, obviously, if you're in it for sells, I'm not saying to change your bias to buys, but you know, if you have a support formed and candles start breaking highs, why are you going to sit in a sell position? That makes no sense. For you to sit in a sell position when now you have information that buys are a valid trade, it doesn't make sense to sit in the sell. Just close the position or take some risk off. You know, you're not gonna want to let your full stop loss get hit for no reason. That makes no sense at all. So, yeah, guys, this is my GA analysis. Let me know what you think. Leave a like, leave a comment, and don't forget to subscribe.